Hey, everybody. I want to thank you for investing in another episode of the Shareholders podcast. It's Monty here once again, man. God is good. It's amazing to be here. First of all, people, do you believe in miracles? Because their miracle is happening right now. There's a person that is on the Zoom who many of you know if you follow the show. Many times he has been on, and uh, hijinks have ensued and things have gone left, which fine. This person has been in my life a long time and has actively tried to supervise my demise, but yet and still. But today he's on the business show, okay? And he's on the business show for a reason. Like, do you ever have a friend like who in March they couldn't fight, but then in like September they a purple belt in karate, and it's like, what happened to you, man? Because you couldn't do a doggone thing. This is kind of what we have here today. Show favorite is back. Ricardo Robert, aka Ricky Bobby, is back on the show again. Sir, how are you today?
Oh, I'm doing well. God is good, bro. I like that setup, man. To bring down your demise. I've only enhanced your life and made things great for you.
Everything I've said is true. So that's, but
So
not
many
here.
stories.
So here's what I did not realize, that during the pandemic, old Rick here was hard at work learning the trade of trading, if you will. Basically, out here flipping and dipping on the stock market, which I had no idea. Now, a lot of people think about the stock market like it's the scary thing that is unknown and I don't know what's going on. And it kind of is, but it's also something that if you take time, which I am now just doing, you can start to understand. So let's start from the beginning. How did you get into even learning about the stock market?
That's a good question. So, well, I'm gonna give you a little backstory too. Okay. So obviously, a lot. I mean, and me and you, we've worked a couple of the same jobs through our history. Many years ago in Lansing, Michigan, we worked at Michigan National Bank, different branches and whatnot. But I've worked in finance ever since I've got out of high school and in college. I was a banker for Wells Fargo, uh, customer service for Michigan National Bank, Citibank and credit cards, and also been into mortgages and all parts of the finances and loan department. So in different parts of it. Now, but never got into the investing side of it until the we got shut down. We got furloughed when the coronavirus hit. And one day I was like, I think for what it was, actually I know what it was. My job where I worked at, I work at, their stock price went down, and I know where it normally is. It's normally trades at like $100 or something like that, and for some reason it was down to 20 or 40, 30 some dollars like that. I said, oh my goodness. I said, that's cheap. That's like finding out like somebody's a Gucci bag went on sale, like a $2,000 Gucci bag went on sale for like $250. I was like, oh my goodness, So I bought it, and then it went up. And so I said, oh my goodness. I said, so I just decided to start watching some YouTube videos, some stock analysts, some traders. And number one, this is not financial advice. I'm just, I'm a retail investor myself. I just invest my own personal. And so, so I just decided to start watching videos and people who trade and they teach classes and all that. And that's how I got involved during the pandemic.
Okay, so right. So then you really kind of jumped in the pandemic. And yes, you have a financial background and things like that. Never really applied yourself in any of those things until now, but we're glad for that. So now, and the thing is though, a lot of people kind of uh, talk like you talk, like they use the pandemic to maybe not just with stocks and things, but to kind of educate themselves in some things while they had time. Some folks were furloughed, some for laid off, whatever. But you kind of did, but I'm joking a little bit, but with your financial background, because you have always worked in some kind of, it's funny when you say that, but you kind of noticed something, you jumped on it, and then you took the time to watch some videos and watch some things from people like that. And of course, on this show, you've heard me say this 1,000 times. People, you have to use the resources out there. You have to be taught. You have to be willing to be taught. You cannot just think you're going to go out in any field. I don't care if it's finance. I don't care if you're playing football. I don't care if you're learning to run a restaurant. Somebody has to pour into you and you have to learn some things. So now you start watching the videos and things like that. So when did you really start to think? Because again, this is not monopoly money we're talking about. This is real money. When did you think, okay, I think I know what I'm doing? When did you kind of get to that point?
During the pandemic, when I was furloughed from my job, I was off for a few months. I decided to, after number one, buying some of the shares of my job and seeing that the price started going up, I was like, man, I said, I'm going to drive Postmates. I drove Postmates for like 2 months to make $1,000. And I said, I'm going to use that money as my initial investment to start investing in the stock market and whatnot. And then I started watching different YouTube videos and different people like this guy named Chris Sane and the Stock Mo, and also Meet Kevin. These are some amazing teachers. I would suggest you follow them on YouTube. These guys teach some amazing tools. They even have classes that you can buy into. But whatever the case is, I took $1,000 from my ride share and used that as my investment to start buying different stocks. And then I just started following these guys' channels and looking up different stocks, blue chip stocks and different ones. And now cryptocurrency of things to invest in. And that's kind of how I got hooked,
Okay, and we're going to get to the cryptocurrency in a second. So now, what happens kind of on your day-to-day? Like explain now, because you got a whole little portfolio of things. You got stocks you bought, stocks you might be wanting to sell. You told me about, you got a watch list of things. What is like, so tomorrow when you wake up, what is going to be your routine with these things, with your stocks?
Okay, so what I do, like for example, if I'm depending on who I'm watching, I usually watch all different guys, and also Keenan Grace is another young guy who I watch. So like for example, let's say Chris Sane, he'll tell you, like let's say you have a watch list. Let's say on your watch list you've noticed that Nike has went down to like $80, and its 52-week high is normally at $150. I'm just saying in general. If you watch that on Monday morning when the market opens, you get out your app, whatever platform you're using, Webull, Robinhood, whatever you're using, you go in there and you buy a certain amount of shares. And if it's red, depending on, as long as it's not a falling knife or something like that, where the market is going down, I'm saying too many terminologies, but you try to buy at a lower price than when you normally see where it normally is at, so that you can make some money when it goes up. And so on Monday mornings, early in the morning at 6:30 our time, I'm usually right on it. I might turn on Meet Kevin and see him do his live show, but then I'm just listening to the financial channels, and I'm seeing where it's going. But a lot of it also depends on what's happening, because number one, we just got out of an election, and that's usually always. I said a lot of stuff I can talk about. After an election, a presidential election, the market's usually either going down or up, depending on who wins or whatnot. And so it depends on what's happening in our world. Right now, we're in a pandemic. We've had a new election. All these different things happen. That determines when you might want to buy. Like right now, there's getting ready to be, Joe Biden is trying to push this infrastructure bill. If this gets passed, it's going to be time to start buying a lot of EV stocks and companies that, promote, that new green movement, because those are stocks that's going to start making money, and so those are the things I look for. I'd look to see what's happening in the news. Did Joe Biden did he get that bill passed, or different things is what's going to determine what I might buy that day. Like I'll keep my dividend stocks like AT&T. I'll build that up all the time. You know what I'm saying? When I make my tips, I'll throw money in there. But other than
So
that,
we'll rate for people listening, break down what is the dividend stock?
so there are companies that pay out dividends, basically paying you to own in their company. It's like profit sharing for your job. Like my wife, when she's worked, she used to get profit sharing and stuff like that. And she hated me telling her business, so I do apologize. But like certain companies, your business or whatnot, they'll pay you for being a part of their company. And that's what dividends are. Basically, you can get a certain amount paid back to you either quarterly, monthly, or depending on which one you want. You can choose a whole bunch of different companies that pay you to own their stocks, their shares in the company. You get a dividend, a payout every quarter or every month. And AT&T is a very good one because number one, they pay almost 7%, which is way more than the banks pay you. That's
Yes.
why,
Yes.
it's sometimes it's like in vain to keep your money just sitting in the bank. I mean, keep cash on hand for your emergency fund, like Dave Ramsey say. But other than that, yeah, I'll try to build up my dividend portfolio so that eventually I'll have enough money where it's paying me to either pay my car note or my mortgage. That is the goal for the dividend stock. And,
Right.
that's just, yeah.
So, and which is very important for you guys to understand. You should look that up. Anybody's interested, look up dividend stocks and see there's a lot of good ones out there. And what he's literally saying is you buy the stock and they'll kind of pay you for buying the stock. It's kind of, not everybody does it, but there's some good ones out there that do it. So now, basically the principle with stocks is you really pretty much want to buy low and sell high because you buy the stock at $30. If it goes up to $80, when then you've made the money basically from the $30 to $80 increase, right there. So then what is it when we talk about where like they say, like you say, and then there's people, I want to hit that too. Like you're talking about Biden, he's going to maybe pass a deal. So there's people that are kind of watching because everybody's trying to get in early on, okay, if that passes, you want to get on these companies early because you don't really want to be the last person in because the price is kind of already too high.
Right.
So for you, what then are you kind of partial to? Like, do you feel like you have um, something that you know a little bit more about, like in turn, I don't know, steel or telecommunication? You know what I'm saying? Do you have a specialty, or do you just kind of look across the board at everything?
Well, so okay, that's what they say. Whatever your conviction is on the company is the one you'll lean towards mostly. So for me, I am mostly into, other than get into the cryptocurrency, talking about that right now, I'm mostly into EV. I like EV and I like the dividends because
EV
because
again. Well, EV means
electric vehicles, you know what I'm saying?
right. That's for everybody. Okay.
And
Yeah.
so, zero emission cars, that's what the wave of the future is. It's almost like persons switching from the old house phone, switching to cell phones. It's going to happen. And, when Joe Biden was the vice president and Obama was president, they were pushing that agenda many years ago, but they didn't have Congress in their back pocket to get a lot of this stuff approved. But now old Joe is in there. He got Congress, not to be political, but now he's able to get more of his agenda pushed, which it helps if you're trying to go green, which is where everything's going. Or a lot of not everything, but a lot of things are going to end up going. So that's one of my strong convictions. Other than dividends, EV is my strong conviction before we get into cryptocurrency.
Right. We're going. So would you? Okay. Again, we're not telling you what to do. Okay. If you're listening to us to have us tell you what to do, you crazy. But
Right.
would you suggest that way to go? Like, try to find something you know a little bit about and go with that instead of trying to just, well, I'm gonna try this and I'm gonna do that. Is that what like the experts you listen to? They kind of suggest that, like you said, go with your conviction.
Well, okay, but it still has to have like what me Kevin says, you still have to have some fundamentals in investing. Like some people just invest in, like, okay, there's a whole bunch of, so the S&P 500, obviously they've already done the homework. You don't have to reinvent the wheel. You can just literally invest in the S&P 500, and because for the history of that company, NASDAQ and all those, they've always been on this uptick. Now, when we've had market crashes, like the housing market crash in '06 or whatnot, '07 or whatever, it dips down, but eventually it's going to still go up. It's always on an uptick. So you're going to always pretty much make maybe 9 to 12% return on your investment if you just throw your money in there. And then of course you can do the mutual funds, and you can do all the stocks that are just, that like a financial advisor would tell you to do. Those are companies that you probably won't really have to worry about, because you got Apple, Coca-Cola, Nike, Google, Amazon. These are companies you can invest in, and you pretty much won't lose. You just leave your money there, and it's going to have a return on your investment. But if you build your own portfolio, you want to start doing research. You follow the analysts and whatnot, and they'll help you. And then you watch it. You look and see who owned the company and whatnot, and you look at their market cap. That basically means how much the stock is worth based on how many people have bought it. That's the value of the stock based on all the shares that's out there, or the outstanding shares and whatnot. And so you look at those companies, and the one that you have a strong conviction on is the ones that you want to kind of buy into. And then you don't just throw the whole boatload of money into it. You kind of strike price in. You can, depending on how much money you have, because like I said, number one with investing, you always want to only invest the amount that you say you could potentially lose, because you could lose, which would lead me to another statement. I could talk about so much about this stuff, but that's why we all, the people who I listen to, they always talk about stop losses. I didn't know this initially. When I first started initially, I bought Tesla before they did a stock split. And stop me before I keep going, because if you have a question. So last year during COVID, Tesla's stock was at $900 a share before they did the stock split. And so I bought it maybe around $700 or $800, whatever, and then went up. And I was like, oh my goodness, I'm making so much money. I made $200, $300. I was like, wow, this is amazing. And then it dipped, and I wasn't paying attention, and I was losing my profits. I said, oh my goodness, because I didn't know about stop losses. And that's something that I thought was unbelievable, where you could literally invest and don't really have to lose. You can set a percentage of what you want to lose.
Okay, so let's rewind real quick for layman. Stock split means what?
So like if a company gets too big, like Amazon or Google, and like Tesla did, they do a stock split. All it is basically you still own the same value of the company. They just kind of make it cheaper, appealing to more smaller investors. You know what I'm saying? Because if you sit at home with $30 million, it's not hard. You can keep buying a stock that's $9,000 or $2,000. Microsoft and all these other companies probably have done stock splits. If you look at the value of a company, you might think they're only worth $140 a share, but they probably already done some stock splits. So basically, the value of the company or the stock could be a certain price, and once it gets too big, other people won't buy into it. So they do a stock split. So now they'll say the stock is 4 for 1. They'll take that one stock and they'll split it in 4. So now it's divided in 4 shares, and you still own that whole amount, but they make it cheaper and it's more appealing to other investors.
Other people, right. Now, and so then you said you put a stop loss. So that means that, let's say, the stock is up to $80, whatever, but then you put something in that if it dips below like 50 to get me out, or is it say to just, let me take my money out, or what does that mean?
So both that, and that's exactly basically what it is. And it's 2 ways you can do it. So like you can either do it where it sells at a certain dollar amount or a certain percentage, or it takes profit at a certain amount. So like for example, AT&T, the dividend stock, I don't usually have to do stop losses on it, but I will, because AT&T recently went up like $2, and I was like, oh man, I made some extra money. So I took my gains, and then I'll put a stop loss on it, because AT&T tends to trade sideways. They don't usually always go up that much. And so the stop loss basically, like you said, it just saves you from losing a certain amount of money, you know what I'm saying, or whatever, or percentage. So you can either set it at 5% or 10% or whatever of that loss, so you don't lose too much of your profits.
I'm going to ask you one more question. GameStop. There was a huge thing about GameStop that was in the news. I watched the documentary. They made a documentary so fast about it, like, right? I was like, oh man.
Everybody wanted to be a part of that movie. Yeah, the movies.
So briefly for the listeners and watchers, what happened with GameStop and the stock market?
Well, I mean, and generally, like I said, I am not a professional. I'm just a retail investor, and based on what I've learned and read and watched. So, obviously we all know GameStop was a company that sells video games for all the gamers, and gaming is a big thing, obviously.
Yes.
But it was becoming obsolete the more that people would download games. You know what I'm saying? People didn't always go into the brick and mortar stores to buy physical games. So GameStop, you know, they've been on a downward spiral a little bit as far as their value of the company. And, you know, a few retail investors, they were buying low because the price was low, like especially during COVID. But certain people were buying way before when they saw the price. Like I say, I always use the analogy: Gucci's on sale, let's go buy some Gucci. So that's how it was with GameStop. So, but what happened was these hedge funders, these are companies, $1 million, almost $1 billion corporations. They literally send out media, send out all this social media stuff on all this stuff, ads and whatnot, to make the stock go down, which is like putting a put on it, that just means they're betting on a company to go down and lose, which seems terrible. It's like, that's bad. And these other guys got together, these real investors, like these guys from Wall Street Bets and Reddit, whatnot. These guys all came together and was like, nah, we ain't going for that no more. We're going to try to make sure that, number one, they lose their money, and we're going to keep that company in business. So what they did was they start buying all these shares, buying shares, and making the stock run up. The same way.
So I'm going to ask, so just so people understand again, the big companies and these brokerage houses, you can bet on a stock to fall, just like how, you know, a normal person would probably be like, oh, I'm a Amazon because Amazon's going to last, and I want to ride that out and make as much money. But you can be like, okay, I'm going to hope that Apple fails, so you can actually do that, right? That's called put option.
It's a put. It's like, it's basically, well, and everyone probably does it. They have calls and puts. It's basically saying that, let's say, for example, and that's not necessarily making a company fail when you buy a put. That just means you think the price of the stock is going to go down a certain percent. That's a put. But the hedge fund companies literally be trying to make sure it drops. Like, they'll literally buy millions and millions of dollars of the stock at a certain price, and it'll hurt and sell it. Sell. It's like that movie Trading Places.
Remember? I was just about to say, right? It's a trade.
Sell. That's literally how that stuff works, man. It's so crazy. They literally do that stuff, and you would think that's illegal, man. It is, but I mean, that's how America has been built, you know, on a lot, you know, people's capitalism and stuff. So, but yeah. So
then the little guys saw that and were like, man, and you made a good point. You got to understand something. I used to be very heavy into the gaming community, and it's a loyal base. And people, I mean, they complain about GameStop because GameStop is whack a little bit, because you'll bring your PlayStation 3 and they'd be like, trade in your games and stuff. And they'll be like, sure. So you give them a PlayStation 3 and 45 games. They'll be like, here's $6. You'd be like, Joker.
That's the pawn shop mentality.
Yeah, like, it cost me $5 to get here. Y'all gonna get, you know, but people still rock with them. So the little guys, they all got together, and I watched in the documentary, there's these sites, and there was this one guy that really thought, he's like, they're trying to say GameStop's over, but I believe it's gonna, and they actually built the price back up. Right. And something I want to hit on as well, man. There's so much we got to talk about. A lot of people were using what's called Robinhood, which is, and I know it's a lot. Quickly break down, what is Robinhood?
Robinhood is a trading platform that they changed the game. Basically, they allow you to invest in the stock market without zero commissions. You know what I'm saying? So you don't have to get charged fees. Because back in the day, when you want to go to like Ameritrade, or I went to that one place years ago when, I want to tell you a quick story. When Facebook, I didn't even know about, you was the one who put me on with Facebook. It was kind of funny. I had no idea what Facebook was, right? You was like, I can't believe you're not on Facebook. And so when I found out they were going to have their IPO, their initial public offering, I'll just say, when I say acronyms, I'll try to explain what it is. When they were going to go public, I bought some shares in the company. And so I went through some trading company. I forgot the name of that company.
TD Waterhouse?
Say it again.
Was it TD Waterhouse?
No, it was, I forgot the name. It was a real Scottrade. I went to Scottrade.
Yeah.
I use Scottrade. I haven't seen them around in a while, but that's why I went to buy my stock and shares in. And they have all these guys that help, but you have to pay money to do that. But basically, now that technology is advanced, because that was like some 10 something plus years ago that I did that, or longer. But now that, you know, technology advanced, smartphones and all that, you just download the app, and hence the name Robinhood, is because they're robbing from this program. They don't charge, but basically,
bro, I'm promising you, somebody was trying to get me on the stocks way back then, and they said stock trade a couple places. But when I found out you had to pay to trade, it turned me off. I was like, bro, I ain't about to pay this dude just to put my money someplace, and I don't even know what's going. It's honestly turned me off.
Yeah.
And then once I saw that documentary talking about Robinhood again, I said, see, somebody then thought and just changed the game and made it free. You know, so okay, let's wrap it up. So when we get into, so basically people on Robinhood, they use Robinhood, some other places too. They try to build up, they built up the GameStop stock, right? But then all the big the big brokerage firms and stuff got upset.
Suits, call them the suits.
Right. So go ahead and finish it. Yeah.
So the suits, man, you know, they were betting for it to fall, but all the retail investors, like I say, all the guys on like Wall Street Bets, that's the name of that
that's it.
In that big group. They wasn't having it. They was tired of this stuff. They was like, man, no, we're not doing that. And so, man, it was almost upwards to maybe some billions of dollars in losses that those hedge funds had to suffer, and people bailed them out. Like the guy who owned that, I don't know what basketball team he owns, he was bailing mugs out. He really got death threats and stuff, man. I forgot his name. I have to look him up, whatever. But so they literally went and shot Robinhood. GameStop from like $5 all the way up to like $400 a share. That's major return on your investment. That's unheard of. Now it's kind of trending to this day. It's probably trending at around 160. Which is still good because they literally saved the company.
They say yes. Like, guys, I think I saw it on Hulu. It's an amazing documentary, and you learn there's some little kid that his mother got him a GameStop, stock way back when GameStop was like, 42 cents. Now, the boy got a Lamborghini and he's 8 years old or whatever. I mean, it's just saying. So, that's kind of the allure of the stock market. Like, man, that's crazy getting big. Okay. I just wanted to hit on that because that was a huge story. I mean, it still is kind of developing because stuff's still happening. The one thing that was kind of whack was that Robinhood at one point stopped all trading on GameStop, and people got really upset about that. And the Robinhood founder guy was in trouble for a minute, and they felt he was in cahoots and, helping out the big guy instead of the little guy. But anyway, so we say all that to say it is volatile out there. There's a lot of ups and downs of things, but there is a new kid on the block, if you will.
Oh, yeah.
And that is the Coinbase. All right, Coinbase, if you've heard of it, you might have heard of Bitcoin. Now Dogecoin is out here in these streets. All right, sir, I will give you the floor. Tell us how to get rich. No, I'm just saying.
Tell us.
Break down what is happening with this Coinbase thing. Because if you guys watched the last one, I had on a good guy, guy I know, Mr. Eric Green, and he's a little skeptical about it. He gave us some really good advice on some practical things, but when we got to that, he was a little skeptical about it. But break down what it really is and how it's developing in the stock market.
Yeah, I know Brother Green. He's a good guy, really smart. So I listen to him because he's a smart dude. So with Coinbase, Coinbase is basically like another avenue that's coming out to help people when in the cryptocurrency world to buy and sell their currency in that world. It's basically like saying the new Robinhood of the cryptocurrency. And so they recently had an IPO. They came out. I bought a share in there, just not even a lot. And it went up just like normal. It goes up and then it went down. And they're saying, but it's a good buy now because it's actually at a lower price. But so basically, it gives you the opportunity to get all these cryptocurrencies on one platform because, like, prior to knowing this, like I was looking at Dogecoin, which was initially invented as a meme. It wasn't even real. These two engineers, smart dudes, invented it just as a joke. But because it became so popular, you know how social media is, people on TikTok, on Twitter, Elon Musk and Mark Cuban, all these guys are pushing for it to actually be something that you can actually use to buy and trade and sell. It starts shooting up. And then Coinbase is basically just a platform that you can use to buy those currencies. That's all. But Robinhood allows you to do the same thing too, though.
So the practical person who doesn't know anything about this is going to be like, what is a Bitcoin? I can't go to 7-Eleven and give them some Bitcoin for a Slurpee, or I can't, go to Macy's and buy a couch or an outfit based on Bitcoin. Like, what is this?
Not
Why is
yet.
this a real thing?
Well, okay, so a couple reasons. The school of thought here, the reason why some people, I can't say this is 100% the truth why Bitcoin is what it is. Well, I remember when I first moved to Las Vegas and I got that phone call. Me and my wife was in bed, and somebody called and said, "Hey, you should should consider investing in this business opportunity." You get those little calls, you think it's a scam. They said, "This is this new cryptocurrency." And I was like, "What is a cryptocurrency?" Called Bitcoin. It's $250 a share, and you should buy it because it's going to be the wave of the future. And I laughed them to scorn. Hung up on their face. Man, in hindsight. But so basically all it is just it's cryptocurrency. And the way I usually give people the analogy of it is understanding currency exchange is one of the biggest market movers, even bigger than the stock market.
Yes.
If you go into Europe, Israel, Mexico, anywhere around the world, every country usually has their own currency, and the value of it may not be as good as others. You know what I'm saying?
Right.
We always think American has the best dollar. Europe's dollar has been great and whatnot. So
that's
it's
like
almost
that's what Forex is, right?
That's what Forex is, yeah. And
right.
So it's just like that, but that's what I'm saying. That's why I'll be trying to help people understand the cryptocurrency world is kind of similar. It's not the exact same, but it's like that. It's you're just trading currency, you know what I'm saying? But people have these engineers created currency. It's become popular, and now you can companies like I said, Mark Cuban, he will allow you to go to a Dallas Mavericks game by using Bitcoin and Dogecoin, so that people can it can be more accepted. And what it does, it pushes it so that if you own it, the value of your currency goes up because the more people buying it, the more it goes up. It's just basically, it's just a digital coin. Because back in the day, in order to get years ago, which I didn't know about this then, in order to even own a Bitcoin, you just have to do something called mining it, which is, it was it was some technical thing. Because my coworker was telling me about this. He said, man, people used to come to the hotels with this big old radio. Remember that movie with Will Smith?
The Pursuit of Happiness.
Pursuit of Happiness. Yeah, he was walking around with that big old computer thing, and he was he was real smart. That's kind of how those guys was. They had this big machine that would draw all the power because they were mining the coin or whatever that process was. I never really looked into that. That's how it used to be, and that way it was a limit of coins. That's why Bitcoin is so valuable, because it's actually a limit of how many coins is out there, whatnot. And so, but basically all it is just crypto coins, it's just the technical terms for just basically something in the internet world, you know what I'm saying? And it's become popular because a lot of people, like the bad guys or whatnot, you can buy stuff on the black market with it. The government can't monitor it. So it's become more, people's like, oh, wow, I can do a lot of other stuff with this kind of currency. And you can actually use it. And then you can sell it and get your real cash from your currency, from your country. So, that's all the different coins are. Altcoins, meme coins. That's what they really are,
So let's get into this. This is one of the things that now I've dipped my toe in it. You got me kind of, slipping and dipping a little bit.
I don't think you want to use that term.
But here's what's crazy about it. So we're taping this on Sunday, and the day before on Saturday Night Live, Elon Musk was the host. And now Elon Musk is he's a big proponent of Dogecoin, which is his Bitcoin, is Dogecoin, it's cryptocurrency thing. He's I think he called himself the Doge father, or the father of Dogecoin, whatever. Right. And so this is what always gets me nervous, is that people are like, okay, Elon Musk about to go on, man. Watch stuff might, it's, you don't know what's gonna happen. And so I got the article up here. So Elon gets on there, and Dogecoin, I don't even know why, but it starts to slide the price. Now I own about $3.75 of Dogecoin, but still it's my $3.75. And the thing everybody's hoping is that at some point it gets to $1. You know what I'm saying, for like Dogecoin. Not at $1 yet.
Become more of a stable coin, right?
Right, so it'll be stable. And so I think it was around when Saturday Night Live started, it was around like 70 cents. And then during the first hour of him being on, it dropped below 50 cents and even got as low as 43 cents just during Saturday Night Live. You know what I'm saying? And then it kind of rebounded up a little bit. But can you explain why that is? Like, that's such a thing that I think when people are detractors of stock market and all this stuff, they're like, see, all it takes is one person to do something and you lose all your money. Like, what is that? What is that happens?
Well, see, everybody was expecting Elon to get on there, and honestly, I didn't, up until earlier, I didn't even watch the show because I was at work, and but I did watch it early today, and honestly, I didn't think it was bad. I mean, other than the jokes and stuff, it wasn't like your typical Saturday Night Live show, but I watched and I understood why people was afraid, but then I had to watch other articles and I watched my analysts to find out the real truth. It wasn't so much that, like, when Elon's mom got on there and she was like, for my birthday or for Mother's Day, don't get me no Dogecoin. So it was like Dogecoin
I didn't know that.
was the butt of the jokes. And so, but then also the other part of it was when Michael Shea, one of the comedians on Saturday Night Live, when he was asking and drilling, Elon about what actually is Dogecoin though. But what is Dogecoin? And every time he explained it, he said, oh, "Okay, but what is Dogecoin?" Because the joke was, "I don't get it. It don't make sense."
Right.
And he said basically it's whatever. He said, "Oh, so it's a hustle." So Black Hole put out there.
Okay.
Black Hole put the stamp up and said it's a hustle, and Elon just agreed, yeah, it's a hustle, because he basically saying you can make money off of it. So then it just made it look as if that Dogecoin wasn't the real deal, and But here's the thing, though. That's not even the main issue. There's a guy named Barry Silbert or something. The guy from this big company, one of these whales. He sent out a tweet. I wish I can remember. I don't have my phone. This guy sent out a tweet. And this is how it be. These guys from these hedge funds, and this guy is big in the currency world. You might have to look him up. His last name, I think he spelled it
Barry
Silbert. Silbert, yeah. He sent out his tweet. You probably have to look his tweet up. He tweeted about, all right, Dogecoin people, it's time to get out of the Doge and come on back to Bitcoin, basically. And he's really big in the cryptocurrency world. So on top of what's going on Saturday Night Live, he does that. And then, all these people, number one, all these whales are selling off their stock to make it go down. What they're doing is the same thing that hedge funds are trying to do. They're trying to push the price down so that all the people who bought in at 70 cents, whatever they bought in at, who didn't get in early when it was at 7 cents, now it dips down, they lose their money, and then they buy back in when it's low. Because notice, it didn't stay down long. Once it dipped down, and the thing about cryptocurrencies, it will dip 20, 10, 30% a day, and it'll go up. So you can make 20% on your return, and you can lose it just like that in a day. But it went right back up, though. You know what I'm saying? So it's like, Dogecoin is probably going to go to $1. Like, if you look at the stock analyst, I look at the tip ranks, and then there's this other company called Coin. These guys, the coin analysts, I forgot the real name. They have Dogecoin going. I don't know if I emailed or text you that. I'm not sure if I did or not. They have Dogecoin going to possibly $2 a share before the end of the year. Whoa. Now, if that's the case, that's not guaranteed. But if that's the case, at 50 cents, that's 4 times your investment.
Yes.
But you only want to put in as much as you're willing to lose. So, but those are the type of things that happen with media. They try to jade the market and they make that junk go down. It's the whole trading places effect, man. Mortimer.
This, we want the crop reports for the oranges, but
they want the crop reports. They pay the old boy to go out there and they get the shady reports, and that's what they do.
Yeah. But okay, so to kind of summarize, I mean, we know we're giving you guys a lot of information, but this is something where I've talked about this before. We all trying to be better with our finances and all that. You do need multiple streams of income, and this can be one. I mean, you have your gift that you're good in and something you applied in or whatever, you got your college degree and all that stuff, but this is another thing that is out there for you. And I just don't want people, because I used to do the same thing, just think it's this mystery, crazy thing. That's not for me. It can be for you if you apply yourself. So
it's a great vehicle to build.
Yeah,
it is.
So I want to say this, and we're gonna wrap it up. But you told me this, and this is how I rock with it. And I would tell anybody this: the money you put into it, not that you're trying to throw away your money, but you have to kind of just let it. I don't stress. It's money that I'm able to use. This is probably money that I'll be buying, you know, a Wendy's number 5. Not that I'll be, but you know what I'm saying? Like,
Yeah,
don't be like, okay, the baby's college fund, put it in it. No, 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 don't do that. Put in, manage your money. What money can I invest in? And you think about it like that and let it, be like
and
that. Would you agree?
if I could say something, when I was explaining that to you, what I was trying to tell you is like with the cryptocurrency, or also any stock, you don't want to put all your eggs in one basket, whatnot, and or you don't want to invest what you feel like you're going to lose or whatnot. But that was more geared towards. I mean, it is that's the general rule of thumb with anything with the stock market or whatever thing or any investment. But at the same time, scared money don't make money. You told me that. That's the first time I heard that when you told me that. And so you a lot of people, or even for example, the banks. I know Brother Green was talking about this before. You can leave your money in the bank, but they're going to invest your money. It's
Yeah,
not
yeah.
like
Thank
if
you.
you don't, everybody is invested, whether they know it or not.
Yep.
Everybody who has a job, who has income, or is working, you are already invested. If you shop, if you buy goods and services, you're investing. You're either helping the investment of another man's business or whatnot, or and you're investing that way. So you're already spending and helping McDonald's, you're helping Starbucks and all this other stuff. And so, but if you leave your money in the bank with the way inflation is going, you pretty much losing the value of your dollar, but the bank is gaining more because they're taking your money and they're already investing it. And then if you have a 401k in your job, they're investing it. When you sign up for that 401k, that's exactly the same thing they're doing. They're investing your money into the stock market. So it's not like this is a scary thing to do. Let's say you decided to take your baby's fund and invest it. If you have your stop losses on and you watch it, you pretty much won't lose your money as long as you be smart with it. You have to have stop losses. You have to make sure that you have things in place where you don't lose. If you just
Don't
throwing money
lose.
out there and you can't lose. But yeah.
That's key that you said that, man. And again, y'all, these banks. I don't even want to say it's a scam because if you just research it, you'll see what they're doing with your money. Like you say, you're investing whether you know it or not. That's a great point you just said. Because no, I'm gonna put my money in the bank, and the bank says, "Thank you for that. We're going to now invest that money in." So that's why, God forbid, in a terrible time, we can't all go to the bank and all get our money out because they ain't got it. They don't have all our money because they put all our money in other things that are helping them. So you might as well take it. What are they giving? What's the interest percentage you getting at a bank? What
0.05 sometimes.
point? Like it's a joke. So you
It
might
is.
as well, like he says, be smart, do your stop losses, and you know what I'm saying, you'll get much more. Even on like a small, if I would listen to a guy 12 years ago, I asked the broker back then, I said, what's good to get into? He said, he's like, just do something long term, do Facebook or do Google. 12 years ago, and Mr. Know It All here, I thought he was gonna give me some hot secret stock thing. He didn't. I said, man, whatever. Do you understand? There would be a Rolex on this wrist right now if I had done that.
Yes.
But anyway, so
Yep.
we're gonna wrap it up. Hopefully this has helped you guys because here's the thing. Old Rick is far ahead of me in the game. So you know what I'm going to do after this? I'm not going
Not by
to,
far.
he's lying. I'm not going to close this thing up and be like, I know what I'm doing. No, I'm about to watch some YouTube clips. I'm about to learn. I'm probably going to invest in a class and actually, because, that's what I was going to ask you. Are you considered a day trader?
I do all three
What's
because
the three?
so day traders, swing traders, and there's long-term investors. The long-term investor is with my dividends. I'll just buy that and let it ride and hold it.
Yeah.
The day trading is more so with the cryptocurrency because you can trade it and buy it. If you can buy, you can make so much money with that because if it goes up like those did 40%, if you're not greedy, that's the problem. That's the hardest problem, man. people be riding, oh, keep going, keep going, keep going. Oh man, you got to take your gains, take your gains, take your profits, man. You know, and then the swing trading is the other one. Swing trading is, it can be companies where you'll hold it for, you know, a week or a few months, and then you'll buy out and you'll take your profits on that, and then you'll buy another company. You know, there could be a new company that's doing well, you know, these nano dimensions. It's so much. There's a lady named Kathy Woods. That's a whole nother conversation I could talk about. I don't want to get into it right now, but there's a lady named Kathy Woods who's a real big time investor, and she manages so much money. It's called ARK Investment. It's something to look into. She teaches and helps people to understand about all the futuristic companies to invest in, stuff that you wouldn't even think about that exists. You're like, what in the world? Yeah. So yeah, it's 3 ways to do it. I do all 3 kind of pretty much.
That's interesting too, man. Because I'm already been starting to look at some people and learning some things like that. So now what we usually do at the end of these is I have the person plug their business, but you know, again, this is, you don't really have a business. So what I will have you plug, please just plug, you name some names, but can you just name them against, not everybody, but who are some of the people that I know you said the young guy.
So it's a couple, I'll say 4 of the main people.
Yeah, give us a couple of them.
Really good. Chris Sane, his YouTube channel is just Chris Sane. You search for him on YouTube. Really good guy to follow. His stuff,
Sane, like S-A-N-E, Chris
S-A-I-N, Chris Sane.
Okay, Chris Sane.
He's from Michigan, actually from Grand Rapids. Some people probably know him. I think old Jameson might know him, but I don't know.
Okay.
Chris Sane is one. Meet Kevin is another guy.
Yes, the guy,
really
right.
Smart guy. Meet Kevin. I mean, because Meet Kevin talks about so much other stuff, so he's really good to follow. Keenan Grace is a young dude. I was surprised. You know, he don't really show his portfolio much. Chris Sane is very transparent. That's why I like him, because he shows you. He literally does the $100,000 challenge, where if you do it, make $100,000 in 1 year, following. You know what I'm saying? Wow. Because you're supposed to. Yeah. And that's how I started last year. Last year, I started watching him, and he shows you his account, show you how he's gradually growing his money based on the companies he's buying. And he shows you his whole portfolio, and you can buy some or most of them, and whatever ones give you conviction. And then Stockmo. Stockmo is real cool, dude. He got this cat called Tesla Cat. He's really big investor. He was already an investor. He was already a financial analyst. So he don't have to say this is not financial advice, because he can give financial advice because he was a stock analyst for years. Yeah. So his website is Stockmo. So you got Chris Sane, Stockmo, Keenan Grace, and Meet Kevin. Those are the top 4 people who I kind of follow on YouTube.
So guys, listen, we're just trying to give you some different alternatives, some ways, you know what I'm saying? God, I'm gonna sound so old, but man, if I knew these things when I was younger,
yeah,
boy, oh boy. So if you're looking for different ways for some passive income or whatever, you might find this is. I mean, this has always been out there, but unfortunately, they don't teach us this in schools. They don't really teach stocks and stuff for a reason. I'm not gonna get into all that, but they know.
A whole other conversation.
Yeah, a whole different. We're not gonna go there right now. We ain't got no time, but just check it out. And again, I stress, just like with this and with every person, we've had authors on, we've had TV producers on, do your homework first. I actually watched the guy, I can't remember his name, this young black guy, and he was like, what you want to do is just dummy trade first. He's like, you can set it up on this thing where you're just trading with fake money and just learn how to trade and learn, you know what I'm saying, without even no liability, which I felt was a really great. I was like, that's smart too, you know what I'm saying? So if this is something that interests you, there's so much information out there. You don't even have to, it's not like the back in the day, you don't have to go to college and get all these student loans. You can literally go to the University of YouTube and
right.
So
I know.
Yeah, you know what I'm saying? YouTube you know what I'm saying? So guys, this has been, you don't really understand how crazy this conversation is, because I don't know. Sometimes I don't know who this is I'm talking to sometimes, because when we start talking like this, he makes really good points, and then there's no kind of punchline, or there's like, it's not like the chair's getting pulled out from under me. It's like a real conversation. So thank you, sir.
Hey, thanks for having me, man. It's an honor to be on the show. Well, I'm not about to come out and Oh, never mind.
Yeah, see, that's what I mean. If you watch like another show he's been on, you would see. So I don't know what else, but I'm going to take this information. This is what we do, guys. We share. This is Shareholders Podcast. It's the name of the podcast, Shareholders. So you're trying to be a shareholder here. So thank you, sir. Please, guys, check out those recommendations he gave, because the Meet Kevin guy, he's amazing. I was already just checking him out too. So hope this blesses you. And I've given y'all now 2 shows with Green. Maybe we'll split this up into a 2-part. I don't know. I don't know how long we've gone, but you got a nice financial chunk from Shareholders Podcast. So you know where to check us out, of course, on the Mighty Sharp Network, Shareholders Podcast on Instagram as well, man. We appreciate it. Please subscribe, man. We're trying to get these subscribers up, man. I need to make a little more extra money, but I got some subscribers up. So you know what to do, guys. Yes. You know, we need all this ain't free, baby. You know, these posters and stuff costs money. So we need that help as well. So we know what the motto is, man. I want you guys to be blessed, stay sharp.